Welcome to Inside the Practice, your go-to podcast for stories, tips, and insights from professionals helping dental practices thrive. Hosted by Alan Hollander and Sarah Boylan, and sponsored by ePractice Manager. Enjoy the episode.
Hi, and welcome to Inside the Practice, your go-to podcast for expert-led discussions, actionable insights in the world of dentistry and its specialties. I am your host, Sarah Boylan. Today, I'm very excited to be introducing Sarah Dunn and Michael Wynn from Columbia Bank, and they're going to tell us a little bit about themselves for starters, and then we're going to dive into some of the aspects of what they deal with dentistry and practices. And yeah, let's just get going. So Sarah, why don't you start us off? Tell us a little bit about you.
Well, I've been in banking for about 20 years, started as a bank teller and have worked my way up to this role. I primarily work with dentists. I have for about the last 10 years. I help with all aspects of their relationship from, purchasing a practice or starting a practice all the way to the point where they're selling and getting ready to enter retirement. And I act as relationship manager, so kind of the main point of contact for the client for the bank through all the things that they're doing.
That's excellent. And Michael, how about you?
So I'm also a relationship manager with the Columbia Healthcare banking team, and also started banking a little more over 20 years ago. I started in 2003, also as a teller at good old Washington Mutual. So, kind of a windy path to get to healthcare banking, but really spent some time with branch management and also mortgage and private banking, and now really for the last 7+ years in healthcare banking specifically. And like Sarah, the majority of the folks that I work with are in the dental industry.
That's awesome. Well, it sounds like you both have kind of a well-rounded background to be able to take care of dentists and their practices. So let's start with the big picture. When people hear healthcare banking, it can sound a little generic, but your team at Columbia takes a pretty specialized approach. How would you describe what makes your model different, especially when it comes to working with dental practices?
Well, I believe because we are so specialized and our team is only working with healthcare clients, that we have a really good understanding of how their business operates. We know what the typical metrics of a dental practice are supposed to look like. We understand, kind of the dynamics of the industry. We know all of the partners. So we are involved in all of the different components and societies and groups. So we really have a good gauge on kind of what's going on in our industry. We also, our products and services are geared towards dental clients. So, our loan policy and our underwriting process and the way that our loans are structured are really geared towards their business and the trajectory of their business, as well as our deposit products are tailored to specifically meet the cadence of the type of deposits that they're taking in and payments that they're making. So I think that in that way, because we're so specialized and understand their business, that it's really easy for us to partner with those type of clients.
Nice.
Yeah, I would agree. A lot of what makes our specific team special is kind of the breadth of experience and knowledge. Really, everyone from our support staff to our leadership, well over 20 years in banking, and a lot of it specifically in healthcare banking. So we have kind of a lot of that. We speak that shared language with a lot of dental professionals. Like Sarah said, we understand kind of the business cycle and the specific needs. And quite honestly, with a lot of banks and banking groups, it's hard for them to really understand how healthcare banking works, because they're typically used to having some sort of collateral, whether it's a building or widgets or inventory, and so it can be difficult for some kind of traditional credit administrators or underwriters to truly understand how it works, because we're basically looking at the financials of a practice and kind of assuming or have some sort of degree of certainty that that production level can continue moving forward. So again, it is very kind of individualized and custom in the way that we lend.
Yeah, that's kind of an interesting point as far as like not having widgets to sell, right? It's services. We're
Yeah.
providing services.
Mhm.
And so I suppose, always making sure that their production numbers and collection numbers look good before they're doing like a capital investment of some kind is
Exactly.
probably something what you're looking for. Um, can you give me an example of how you're like super hands-on with a dentist? Like, what level of expertise do you provide?
I think a really good example is, a lot of our clients were with them for their entire life cycle of their practice. And, a lot of my clients, we help them to buy their practice. And it's almost like, like clockwork, 2, 3, 5 years later, they're coming back and saying, now it's time for me to buy my building. Or I
Mhm.
really would like to, buy a piece of land and do a ground up project, or I need to move and do a build out. And so that's something that we are often helping our clients with in terms of at the very beginning of that planning stage, helping them to determine, okay, what is their budget? What is realistic? What kind of distance can they look within? What partners should they be involving in terms of like a contractor and their CPA and that sort of thing, or real estate brokers or whomever, and kind of helping them move to that next phase, which really involves a lot of planning and strategy.
Nice. That's a super hands-on approach. I kind of want to piggyback right off of that, keeping in mind that our listeners are national. So, what advice would you have for somebody listening that's maybe on the East Coast on how they would pick, a good relationship manager with their bank that they're with? And can you kind of give me an idea from start to finish what that whole life cycle that you're mentioning, like what you touched on it a little bit, but can you elaborate a little bit more?
Yeah, absolutely. Well, I would definitely ask them, first of all, what percentage of your clients are dentists or, healthcare professionals? Is this something that you really specialize in? Or is it kind of just an offshoot of what you do? Because I think that, like to Michael's point earlier, if the bank and particularly the credit administrators don't have a really good handle on that type of lending, it's going to be difficult as time progresses and they want to do more and more in their practice. So I would definitely find out, what types of things they can do for dentists, equipment loans, practice purchases, real estate, partner buy-ins and buyouts, multiple locations, that sort of thing. Are they capable of doing all of the things that you want to do in the trajectory of your career plans? And so I think asking some of those questions up front, it would be really important in terms of finding a solid lender. And then in terms of the life cycle of the practice and how we would help our clients, we're there from inception in terms of like helping them plan a startup or do a purchase. And then, like I said, that next phase of maybe they are moving the practice or purchasing their real estate. They'll then maybe buy equipment. Sometimes they're having their associate buy in as they're starting to slow down and maybe get ready for retirement. Or we often see clients nowadays adding multiple locations or multiple partners. And then as they progress and get a few years before retirement and they start to, maybe they want to move into more of the associate role and have, one of their associates buy them out. And then they may, after that, sell their real estate. And we have our private banking team is actually part of our healthcare group. And so we often will make an intro to our private bankers and they can help them with some financial planning and getting ready for that next phase of life and making sure that they're in the right spot personally before they move on towards retirement.
Yeah,
I
that's
think the only
excellent.
thing I would add too, in terms of finding a banker, is it really wherever in the country you are. The dental and medical industry is pretty. It can be a little a smaller community or kind of insular, and so I would certainly recommend even asking for recommendations from their peers.
Yeah.
And I think that's super important, and really there's talk to a few. It's going to be a long relationship, with typically it's going to be at least a 10-year plus relationship with your banker. So you want to work with someone that you like and that you trust, and that it is a relationship. I mean, we're stuck together for quite some time. So it's
Yeah.
that personality fit is also extremely important.
Yeah, well, I imagine you become such trusted advisors to these doctors that it's super important that you're able to connect on multiple levels. Um, so, can we talk a little bit more about buying a practice and what that looks like? I mean, I know you mentioned you did stuff from the ground up or whatnot, but just what do you think are some common mistakes that you guys see?
You want to take that one, Michael?
Yeah, I mean, so some of the common mistakes is really it really has to do with due diligence and the level of due diligence. I think just kind of, if we back up a little bit in terms of picking the right banker to work with, it's also you want to surround yourself with the right team that's going to get you across that finish line if we're talking about buying a practice. So that's going to be your attorney and your CPA, and there could be some other folks, your insurance partner. All those are really critical components of buying a practice and making sure that the buyer is protected.
Mm-hmm.
So, I think I'll let Sarah's got a really good horror story. I think it was about that client that bought the practice and the patient refund account wasn't included, and so.
Oh, yeah.
Oh,
Then
no.
they had to pay a bunch of refunds to patients that they had no idea that they were going to have to pay
Oh,
when they purchased the practice. And yeah, I think a lot of times we see buyers just kind of looking at the valuation and kind of trusting everything that's in the valuation. And I think that the valuation is just they're putting it together. The broker or whomever is producing that is just getting the information that they're given and putting it in a compact format. So we really encourage our buyers to definitely work with a CPA to do due diligence, digging into the books, the software, the charts. How many active patients really are there? What do the ARs really look like? Are they quality? Are there patient refunds? The insurances that they're taking. Where are the patients coming from? That's like how is the seller getting patients, and is that going to be different how the buyer may be getting them, and then types of procedures being done. Can the buyer do everything the seller can do? Sometimes we see the buyer hasn't thought through the fact that maybe they can't place implants, and the seller is placing implants, and that's like 20% of the revenue. So there's just I think it's just so important, and we can provide somewhat of a checklist to our clients, but they can also we really strongly encourage them to work with a CPA as well to dig into all of this, and certainly consultant as well.
Oh, that sounds super dialed in, actually. Like making sure you have the right people on your team is super important. Can you tell me a little bit how you guys advise your clients when there is slower periods of time or economic uncertainty? Let's talk about COVID.
Yeah, well, that COVID.
Wow,
It's a lot of PTSD there.
I know. I'm sorry, we'll just graze over that. But in all honesty, we see peaks and valleys through our practices. I mean, we know what our busy seasons are, and we know when it's typically going to be a little bit slower in the practice. How do you advise your clients on how to prepare for that, or anything along those lines you must speak to?
Well, it's always easier to borrow money when you don't need it. So I think everyone should have a line of credit set up with their bank. Usually you don't have to pay anything on a line of credit unless you're actually using it. So it can just sit there. In addition to savings, of course, you should always, try to develop a cushion. But I think having that line of credit can be a real saving grace. I mean, obviously with COVID, we put all of our clients on a 4-month deferment, and we helped them get, PPP money and everything like that. But I think that those that had a line of credit and those that had a bit of a cushion with their savings, certainly that was really helpful during that time.
Yeah.
I think COVID, I mean, it was a good lesson for a lot of our clients in that, they should really be keeping an eye on their overhead, their costs. They should know if they're within industry standard, and if not, then why. What percentage of their collections is their lease, is their supplies, is other staffing costs. All that's important, and for a good portion of time in our industry, there are some folks that didn't, have their kind of eye on the ball because margins were pretty good. And I think, again, COVID and that squeeze and really kind of all the other factors happening right now, it's just important to truly understand what comes in and out of your account.
Yeah, for sure. Do you guys provide a budget, like template for clients so that way they can, start mapping things out when they're at that point when they're thinking about wanting to maybe do some capital investments, but they're not really sure, they only get the reports in their hands. They're not really sure how to read them. Do you ever help them with that at all?
We definitely can go through their financials, typically their profit and loss and tax returns, and help them. We run like an efficiencies chart so they can see year over year how their efficiencies may be changing. Oh gosh, you had a whole bunch of staff costs, in this year. What happened there? Oh, well, our hygienist, was on maternity leave. And so we had to bring in, a temp employee or something like that. But, I think they should always be thinking towards really growing if it's a general practice, really growing the hygiene, really growing the bread and butter procedures, and not being completely reliant on the bigger ticket items, because, in an economic downturn, those are the types of more elective procedures that people are not going to be doing. And so a lot of our clients can make a lot of money doing a lot of those type of procedures, which is fantastic. But they shouldn't neglect kind of the hygiene and bread and butter, because that's what's going to kind of keep you alive during these tougher times.
Yeah, absolutely. Where do you see people either overextending or being too conservative right now?
I would say sometimes I see it more on the personal side, because the way that we look at our cash flow analysis, typically for single doctor practices or practices that have a couple locations, we look at the personal financial profile as well as the business profile and kind of marry the two together. And sometimes it seems that people may be, doing really well in their business and taking home quite a bit, but on the personal side, they've taken on a lot of additional debt, and it really can make things difficult for them overall, because they're, the single owner of their business. And so the two are very much intertwined.
Mm-hmm. Yeah. Michael, you want to add anything to that?
She kind of hit on a lot of points. It's really just taking a closer look, not only on the business side, and we just mentioned looking at and understanding their P&L and understanding where their money is going, where their costs are, but also that debt load on the personal side is important. And so are they budgeting based on their best year or based on what they think they can reasonably sustain? Those are all kind of reasonable questions, and we're happy to work with them on that. Like Sarah said, we also have our private banking team that's kind of our level of white glove service, but on that personal side. And so in terms of choosing a bank or a banker, make sure that they can kind of help you with in all facets of your life financially.
Nice. Yeah, absolutely. Okay, so the practice is up, it's running, and now the doctor's starting to think it's time to transition out. When do you think a dentist realistically should start planning a sale of his practice, his or her practice?
I would say for sure 5 years before they hope to exit, but I think even 10 years would be smart, because the level of capital gains that you will probably have when you sell your practice and your building will be pretty huge. And if you work with a financial planner or investment person, they can help you sometimes mitigate some of that if you really start planning far ahead. But for sure 5 years, because one of the mistakes that we see people make kind of towards the end of their career is they start to sort of semi-retire. And so, a practice that was doing $1 million or something is now doing, 700,000 because the doctor's taken so many different vacations throughout the year and time off. And it's you can't take your foot off the gas if you hope to sell your practice for, a certain amount. So if you need to bring in an associate or something like that, that would be the smarter move if you're hoping to kind of move into a semi-retirement before fully retiring.
Yeah, because we don't want them to basically devalue their practice as they're getting close to that transition time. I do, I absolutely. I mean, the first thing I think about is the tax consequences when someone's looking to sell their practice. But beyond that, kind of on the other side, I mean, this is typically a business that the he or she has built up over 20, 30 plus years. These are patients and these are staff that they really, really care about. And so a big part of that succession plan, not only the tax planning, but and the valuation, but also, finding the right fit to take on that practice as you leave, and whether that's transitioning, with an associate that's bought in. But that part of it, I think is really critical for some folks as well. But 10 years would be great. 5 years also good. 3 years not optimal, but it's people do it. I mean, we've both had folks that basically kind of woke up and decided that they wanted to sell their practice.
Yeah, totally.
The best case scenario would be, obviously, this is not what a lot of people do. This is just our best advice.
Yeah, no, that's really good advice. And I guess, not to rabbit trail too hard off the subject, but what about DSOs, and what are you guys seeing in the DSO space with practice transitions? Are you seeing more and more pop up? Are you seeing still people doing more private practice these days? What are your thoughts?
We are seeing DSOs. I think that the private equity money tends to kind of be available, and then it kind of dries up, and then it is available and then it kind of dries up. So it's definitely not a path that I think you can for sure count on being able to do. It really depends on the economic climate at the time. I have clients that are basically forming their own DSO. They're just slowly building multi-practices. And then I have more traditional DSO clients, ones that are planning to sell to private equity in the near term. We also are seeing a lot more partnerships and a lot more larger practices with multi-specialty. The way of just having the one single provider, that we're seeing less of, I would say. We're seeing a lot more of kind of everything else. And certainly the DSO model is a path that we are seeing quite a bit of, and you just have to find the right one and understand what you're getting yourself into.
Yeah.
Yeah. Every single one, it's structured so differently. And I'm seeing on my side, I'm seeing a little bit. I feel like a few years ago, almost all of my clients were constantly getting pitched by a DSO.
Yeah.
And so there's been a little bit less of that. And the best advice we can give is just to make sure that their attorney can take a look at the paperwork. But we've certainly adjusted our credit policy to accommodate this specific needs of a DSO, and that's kind of changing as needed, depending again on the structure. But yeah, that's kind of what we're seeing so far.
Nice. Well, it sounds like just making sure that they have the foot on the gas is kind of the main thing that they need to have as far as pieces in place before they go to sell. What other pieces do you think they need to have really dialed in before they sell?
It seems like in every practice transition that I do, if there's going to be an issue, it's going to be with the landlord. I mean, I can almost it's like every single time almost, if there's going to be some sort of problem, it's because there's this third party, unless the seller owns the building that the dental practice is in, you've got this other party that needs to be very involved in this, and you need to be able to have your new buyer secure a lease with this party. And it needs to be a lease that will go for quite a few years, because as we all know, to just move a dental practice is extremely expensive. So that is definitely something, if I were looking to sell my practice in the next few years, I was leasing, I would ensure that I started to sort of look at my lease, have my attorney look at my lease. If I have a good relationship with the landlord, start to sort of, carefully go down that road and make sure that that's going to be a seamless process for my buyer.
Yeah, I
Nice.
mean we do see that a lot. If there's going to be, every transition is a little bit different, but one common thing is that's delayed some practice purchases is the landlord.
Yeah.
And so I think we all can agree that with when a practice owner owns not only the practice but also the building, there's an added value there because you're getting rid of or you're mitigating the landlord risk.
Mm-hmm.
Yeah.
And like, not only, are they going to modify this lease to accommodate, this new buyer, and then what's it going to cost? Like, are they going to jack up this, the rate and the renewal, or just, there's just a lot of added potential risk there. So, when a practice owner also owns the building, that's a big advantage.
Yeah, sounds like it. Well, speaking of rates, can you tell us how interest rates are affecting doctors these days as far as their purchasing? Like, what are rates right now? And we'll just start with that.
Well, I would say, they're a lot higher than they were in like 2021, 2022. I mean, they're close to 6%. And, we keep hearing they're going to go down more, but it's kind of like the way mortgage rates are too. And I think it's impacting in a similar way in that your buying power is it's a little bit less than it was, a few years ago. I will say though, that I do think that has brought purchase prices down a little bit because of the fact that people just can't afford to borrow as much because of the cash flow. So, I would say in 21, 22, when rates were so low, we would see multiple offers on a practice that was in a very desirable area, and the practice might sell for over 100% of collections and that sort of thing. We're not seeing as much of that now. Not to say that there are some practices that will sell at a premium, but it's usually the cash flow, a very strong cash flow with low overhead, that is kind of driving the ability for someone to pay that kind of premium.
Mm-hmm. Michael, do you want anything else to that?
No, not really. I mean, I agree on all those points. It's really, the affordability because of the rates that is, that's certainly going to have an effect on the prices. So yeah, we're not having those kind of frantic multi-offer situations, and so because it's really, every bank's looking at the ability to repay, and so with rates where they are, I mean, and the thing is, historically they're still very low. It's just, a lot of us were spoiled by 3-4 years ago when they're at 3% and in that area. So but it's certainly a consideration, but not only with practice purchases but also equipment and other expansion. I think with certain practices, the timing's just right, and so regardless of the rate, it's something that's right. The timing is correct for where they are in the business cycle, and we're talking about shorter term, 5-10 year money, and so there is an increase in payment, but it's not, for a lot of practices, not to the point where it's going to halt them from their expansion plans.
We're still doing a lot of practice transitions, a lot of expansions. I think that after COVID, people were a little bit scared there for a while, and I think people are over that. People are back to doing what they were planning on doing, and the rates aren't really affecting them. You can always do a refinance later if rates happen to go way down. So.
Mm-hmm. Yeah, that was going to be my next question. Is it pretty easy just to go ahead and refinance when the time's right?
Typically, if it's with your own bank, sometimes there's prepayment penalties and stuff. So you have to kind of weigh all of that if you're looking to make a move. But yeah, definitely typically doable. Yeah.
So talking about career advice for the dentists, for all dentists in different stages, early career dentists, established practice owners, and those who are just starting to think about an exit. What is one solid piece of advice that you would give those doctors listening?
For those that are early in their career and mid of their career, just learn as much as you can clinically and do as much dentistry and as breadth of dentistry as you can possibly do, because you can make the most money chair side. Those clients that I have that are really passionate about doing dentistry and love what they do and are, really focused on doing great dentistry and a lot of it, those are the ones that are really doing well. That those that enter the practice and they're really just trying to be a business owner and not so much do a lot of dentistry, you can get to that point, but you have to really work towards that. And when the more that you can do and the less you have to kind of give to others and like refer out, the more you can keep in your practice and do yourself, the more money you can make.
Yeah, it's about that. It's staying on top of trends. I mean, with dentistry, it's actually pretty fast moving in terms of technology, and so staying on top of that, and also having that network of peers, people that are more experienced, that might have a certain specialty. Learn as you much from them. What we've seen so far really is dentists are very supportive of each other, and so I think that's important. But really both sides of the house. So those clinical skills, but also that business acumen can also that can hinder growth as well. And so it is important for them to not necessarily be experts, but just again stay on top of it and be as educated as they can.
Perfect. That's great answers. Well, I want to wrap it up, but before we do, I wanted to just touch base with you as far as being involved in the dental community. I know you both are very active. I know that Michael and I serve on the Dental Foundation of Oregon's board of directors together, which runs the tooth taxi program.
Yeah.
And it's been great to collaborate with you on some of those projects. Are there any things that you specifically want to point out about what you love about working with the dental community, or anything else you'd like to share with our audience?
Sarah, do you want to start?
Sure. I mean, dentists are such wonderful people to work with. They typically, got into this because they enjoy really helping their patients. And I think for me, it's been fun. I've spent a lot of time at all of the different dental societies, the ODA, the OAGD, the DFO, all these different events and everything over the past few years. And it's just been fun to get to know the community. They are really kind people and people that truly care about taking care of their patients overall. Mm-hmm. It's been a blessing to me.
Yeah, and on top of that, like we do a lot of stuff with our local school of dentistry and the Oregon ASDA. Yeah, and so it's so satisfying to meet someone when they're D1, and then a few years later, you turn around and you're helping them buy a practice, and you're helping them buy the real estate, and that's it's just wonderful to see that, to see that growth. But yeah, with DFO, also Smile Oregon, there's a lot of great organizations that we personally sponsor and our group sponsors, and that we love to be a part of, just because it is a very giving community.
Yeah, it's been great. I've had a lot of fun with both Smile Oregon and the Dental Foundation. So they're great organizations. All right, my friends. Well, thank you so much for joining us. If our listeners have any questions, your contact information is going to appear on the screen, but it'll also be posted on our website. Thank you everybody for tuning in. Really appreciate your time today. And please don't forget to like and subscribe and share the podcast with your colleagues.
Thanks for joining us on Inside the Practice, sponsored by ePractice Manager. We hope